It's the first week of January. You've been waiting for this. All year, you heard the news. Social Security is giving a raise for 2026. So this morning, you check your bank account. You see your deposit. And you do the math in your head. And something feels wrong. The raise you were promised, it looks smaller than it should be. Maybe a lot smaller. And right now, all over America, seniors just like you are staring at their statements, asking the same quiet, frightening question. Where did my raise go? I'm going to tell you exactly where it went, who took part of it, and, most importantly, what you can do about it. Because for some of you, there's money on the table you can still claim back. I'm Milena. I'm a senior policy analyst, and for years my whole job has been one thing: taking these confusing government rules and translating them into plain English for retirees who deserve straight answers. So let me reassure you right now. Take a breath. For most of you, your check did not get cut. That is a fact, and I'll prove it with the official numbers in just a minute. But here's what did happen, something most seniors never noticed. A second number went up at the exact same time as your raise, and it quietly ate into it. I'm going to show you the real figures, straight from the government, and please, stay with me to the end. Because there is one mistake that costs certain seniors hundreds of dollars a month, and there's an official form that can win that money back. Most people have never heard of it. If you leave early, you might miss the one part that puts cash back in your pocket. Let me tell you about Robert. Robert is 68, retired 3 years ago after a long career. He's careful, the kind of man who reads his mail, keeps his folders organized, pays his bills on time. He did everything right. In the fall of 2024, Robert sold a rental property he'd owned for 20 years. It was a good sale, a nice, one-time gain. He paid his taxes on it, felt proud, and didn't think about it again. Fast forward to January 2026. Robert gets his Social Security statement. He sees his 2.8% raise. Good. But then he sees his Medicare premium. And it's not the standard amount everyone else is paying. It's hundreds of dollars higher, every single month. Robert panicked. He thought he'd been overcharged. He thought it was a mistake. He almost just accepted it and paid. Here's what Robert didn't understand. That property sale 2 years earlier had pushed his income up for 1 year, and Medicare uses your income from 2 years ago to set your premium today. He'd been hit with something called IRMAA, a high income surcharge. And here's the part that matters for you. Robert's income had already dropped back to normal. He no longer earned anywhere near that amount. He was being charged a surcharge based on money he didn't make anymore. The trap wasn't the surcharge. The trap was almost not knowing he had the right to challenge it. There's an official form for exactly Robert's situation. He almost left that money on the table forever. Stay with me, because I'll tell you the name of that form. Let's go to the real numbers. Everything I'm about to say comes straight from the government. The Social Security Administration, Medicare, and CMS. No rumors. First, the raise is real. The 2026 cost of living adjustment is 2.8%. For the average retiree, that's about $56 more per month. That part is true, and that part is good. Now here's the second number, the one that ate into your raise. The standard Medicare Part B premium for 2026 jumped to $202.90 a month. Last year, it was $185. That's an increase of $17.90, nearly a 10% jump. It's one of the largest dollar increases in the program's history. So let's do the honest math together. For most of you, that $56 raise minus the $17.90 premium increase leaves you with about $38 a month in real gain. Now listen carefully, because this is where I have to be straight with you. You may have seen headlines screaming that your entire raise is gone. That is not true for most people. Your raise was reduced. About a third of it was absorbed by Medicare, but it was not erased. For the average retiree, your check still went up. Don't let anyone scare you into thinking you lost everything. And here's a protection you may have never heard of. It's called the Hold Harmless provision, written right into the Social Security Act. In plain English, for the roughly 70% of people who have their Part B premium taken straight out of their Social Security check, this rule says your net Social Security payment cannot go down from 1 year to the next just because Medicare premiums went up. Your raise can shrink, but the dollar amount of your check is protected from dropping. But, and this matters, Hold Harmless does not protect everyone. It does not apply if you pay Medicare directly instead of through your check if you're a higher income beneficiary paying that IRMAA surcharge, Or if you're in your very first year on Part B, if you're in one of those groups, you need to pay closer attention. Now about Robert's problem. IRMAA. This is the income-related surcharge. It kicks in once your income goes above $109,000 if you're single, or $218,000 for a married couple. And here's the cruel part. It's based on your tax return from 2 years ago. So a one-time event, selling a home, a large withdrawal, a Roth conversion, can spike your income for a single year and trigger a surcharge long after your income has dropped back down. At the top, that surcharge can push a Part B premium towards $690 a month. That's the trap Robert nearly fell into. So what do you actually do? 3 steps. Write these down. Step 1. Verify your own numbers directly at the source. Don't rely on a headline or a phone call from a stranger. Log into your account at the official site, SSA.gov, and look at your benefit and your premium yourself. Check Medicare's official costs at Medicare.gov. If a website ends in anything other than .gov, be careful. Step 2. If you've been hit with an IRMAA surcharge because of a one-time income event and your income has since gone down, you may be able to get it reduced. The official form is called Form SSA-44 for a life-changing event. Qualifying events include retirement or work stoppage, the death of a spouse, marriage, divorce, or loss of a pension. You can find it at SSA.gov or call Social Security directly at 1-800-77-21213. This is the form Robert used. It's how you get that money back, but you have to ask. Step 3. If money is tight, check whether you qualify for help paying your premium. Programs like the Specified Low-Income Medicare Beneficiary Program can cover your Part B premium entirely. Ask about Medicare savings programs at Medicare.gov. Thousands of seniors who qualify never apply, simply because no one told them it existed. Here's the truth I want you to walk away with. Your raise is real. Medicare quietly took a piece of it. And for some of you, there's an official form that can win money back. Money the government will not return unless you ask for it. Now, an important word of caution from me to you. There are people out there who target seniors with these exact topics. They create urgency, they sound official, and they try to pull you off into private channels or get you to download things or hand over your information. Please don't. The only places you ever need are the official government sites, SSA.gov and Medicare.gov. Real help never costs you your personal details. So here's how you can help yourself and the people you love. If this made one confusing rule a little clearer, subscribe. It's free, and it's how you'll catch the next update when these numbers change again. Leave a comment below telling me which topic worries you most for 2026, and I'll cover it in an upcoming video. And most importantly, share this with one person, a spouse, a neighbor, a friend at church who's worried about their check. That one share could save them hundreds of dollars. You worked your whole life for these benefits. You deserve to understand them. I'm Milena, and I'll see you in the next one. Take care of yourself.